This video is going to teach you guys how to use market structure to increase winning rates on your strategy. So you guys, this is going to be a video on how to increase your win rate. Combining the market setup or market levels can greatly help you increase your win rate by understanding where the market is trading into, levels it's trading around, identifying support and resistance on the market can greatly help increase the winning rate on any strategy you are trading, whether it be a break and retest, a flag, whatever it may be. As you guys know, a majority of the stocks that you do trade make up the indices, so a strong indice is going to lead to a higher likelihood of a strong follow-through on the position you are watching. So, importance, right? Our goal is going to be how can we increase our winning rate and in turn making more money. Anytime we can win more, with including risk to reward into it, it is going to help us make more money. So identifying these levels can greatly help you with that. Now, the one thing you don't want to do is focus solely on your win rate. Yes, it is very important, but keep in mind the risk to reward also matters. So it's not solely your win rate, it also matters about your risk to reward. But typically, if you increase your win rate, you are going to increase the likelihood that you will make money, you will become profitable, or you will make more money for that matter. So this tip and this breakdown is going to show you guys how to do just that. Again, like I mentioned to start, it's going to be using market levels. And we want to do this before the market opens. We're going to start mapping out key levels on the markets, monitoring those levels, and watching how the markets trade into those levels while simultaneously watching setups of our own. So if we're looking at Apple, and Apple compromises so much of the S&P 500 and the NASDAQ, you want to know where the NASDAQ and the S&P 500 are. Without, you're missing a key element. And you could be wondering, well, why did Apple go down? And then you look at the market and you're like, oh, wow, the market pulled back. So the levels that I use on are SPY, /NQ, ES, and RTY. So this is going to be the NASDAQ futures. This is going to be the S&P 500 futures. And RTY is going to be the small cap futures. Now you may be wondering, what levels are you mapping out? The main ones that I look for are hourly and daily levels, and this will be support and resistance. So anytime I see a break and retest or a big move from a level, it's going to be levels that I want to keep on watch. I'm not going to primarily be looking at like a 2-minute or a 1-minute support and resistance because they're not that reliable. These longer term time frames on the hourly, the daily, or even the 4-hour, map these levels out before the market starts. Now, let's say the market is trading at 15,000. You don't want to just waste your time and mark out a level that's up here, like say like 20,000, because the market's nowhere near that. It's just extra work that you guys don't have to put in. So map levels that are near that price level, not ones that are just extremely far away, because you mapping them out extremely far away does nothing other than making you do more work. The main ones that I would highly recommend using: prior day close, prior day high, prior day low, and then the opening print. Especially on futures, you'll notice that opening print is a huge level that often holds a support below or resistance above. Another one to think of other than hourly and daily support and resistance levels are those psych regions. So if the NASDAQ is coming into 16,000, for example, or 15,000 in this case right here, it's more than likely going to at least see an initial rejection. The chances of it just coming up to a whole psych region like that and going like that are less likely than it is to do something like this or do something like this. So identifying those key levels and having them mapped out. Now, I touched on this briefly. It's helpful because a majority of the stocks that you are trading, especially options trading in large caps, make up that indice. And when the indice gains strength, so let's say the indice is pushing higher, the increased likelihood then of that stock that you are trading to push higher. They say roughly 75% of the stock price movement is going to be correlated to the market. So if we can catch a market that is in our favor and a setup in our favor, that is drastically going to increase your win rate. And that's what we are looking for in this example. For myself, I am much more cautious taking calls when the market is approaching a key resistance, because I know that there's a chance that the market could come up to this level and reject. Yes, it could be a really good setup, but if the market's pulling back, it's more than likely going to do this on your stock also. Same thing with puts at a support. So if we're coming down to a major price support and I'm eyeing puts, I will not take them if the market is at a key support. Let's break down a few examples. So let's say this is just the NASDAQ. So let's say this is /NQ. And we see it coming up to a major price resistance. And yes, this is a 1, 2, 3 setup, but we're pushing into major price resistance. What could likely happen then is we reject here, or at least get an initial push lower off of that first test. So if the market is testing a key resistance, I'm less interested in taking calls, because I know this is an area. It doesn't mean that the market is going to sell off here or pull back here. It could very well just pop right through, but it is more likely to see at least an initial reaction at this level and a pullback. And if I'm looking to scalp or take a long on a setup and it comes into this level and I get that pullback or the market pulls back, more chances than not the setup that you're trading or the stock that you are trading is going to pull back. Especially when you're thinking of like Apple, Amazon, Google, Microsoft, all of these mega caps, they do move with the market. There are some exceptions. If news comes out, obviously that's a different thing. If it's a stock-specific news, completely different. But in general, it will be following the market. I do not like to take, I'm less interested, I should say, in taking calls when the market is testing a key resistance. Same thing with support. We come down here into a support, and I'm trying to buy puts here, and all of a sudden we're coming into a huge price level, let's say 15,000 on the NASDAQ. So if we're coming into this, we're much more likely to hold this and at least bounce. Yes, we could get a lower high and push lower, but at least an initial reaction. That initial reaction oftentimes is enough to shake you out of your position. So if you're trading Apple, for example, and we're coming down into this price support, and you're trying to short this because you're like, oh, it's a breakdown, and then all of a sudden you don't see the market at a 15,000 support, it does one of these, it creates a new high, and then it makes that move lower because we failed that level. So when we first test this level, I'm less interested, for in this case, taking puts at support at a key market level. One thing I recommend doing too is taking a look at the structure. When I'm referring to structure, I'm talking about the trend of what the stock is doing and what the market specifically is doing. Are we in a series of uptrends like this? So let's say this is a higher low in a trend right here. So when we make this new low, we also have this new pivot right here. And as long as this pullback that we get right here is above this right here, it's still a higher low. And anytime we're in a higher low, that's the element or the basics of an uptrending move. When you have an uptrending market, you are more likely to see a follow through on the long side. So keep that in mind. Now let's take a look at some charts, and let's go out of here. Let's end this, and then let's go into some charts. So right here, we have the NASDAQ. We're going to start by mapping out those key levels. Now, the nice thing with Thinkorswim is I have custom studies for that prior day close and things like that. So I can map these levels out here. So that prior day close, the prior day low, and the opening print and whatnot is going to be mapped out here. So let me show you guys. The prior day close is going to be right here, prior day high, and then that prior day low. So this is giving me the ability to see these levels. Now, when you're mapping out these levels, you can see we wouldn't want to be taking puts at support right here. You can see this push up here, and then if we come back and retest, then we could be eyeing puts on the move, but we're coming into key price levels. Same thing when we're coming into or we're trading below this prior day high. You can see we're rejecting here. So if we're trying to take calls on Apple, Amazon, whatever it might be, more than likely to fail. Now, it would be different if we got back above this level like such right here. And let me go into here and turn that off. So it'd be much different if we were coming back here and then doing something like this, because then we held this area right here. But instead, we're rejecting here and we're rejecting here. We would not want to be looking to the long side if we have multiple rejections at a key market level on /NQ. Similar to this breakout right here. One thing to also think of is if you would have taken this setup and it failed, a lot of other people may have taken that same setup in their trap. Same thing with this right here. You get this potential breakout here. Boom, stuff this lower, hold support. We come back into support, come back into support here. Holding this support area, I would be less likely or less interested in taking puts here, as we are holding a prior price support, making me less interested in this move. I hope this video helps you guys. Leave any questions or comments you guys have down below. I would love to help respond to them. And if you have any questions, feel free to leave them down below also. Enjoy.